Good morning, everyone. Paul Duncan here with GammaEdge. It is Thursday, the 24th of February. Let's get into it. Really, nothing has changed in the overall state of the markets. We're expecting continued bearishness and volatility. Um, Again, make sure you've read Taylor's Market View in the GammaEdge Discord under the Market Status channel. A lot of good content in there. Tells us basically not to be doing anything. Long positions, risk off. There's no reason to try to get into anything right now. Short positions, you're probably too late here too. The signal was several days ago. It's very difficult to justify any exposure here, except on the shortest of shortest time frames. Medium term, still terrible breath. Stocks are getting pounded continually. Longer term, again, without having anything going on in the shorter and medium terms, the longer term is still bearish, and the moving average ribbon is now heading down. You'll see that here shortly. The ES overnight, the entire complex is shifting down in context of the zeros, and when that happens, we typically take that as puts being added. But the lower side of the complex for negative GEX, minus gamma exposure, and the put open interest is stable. So the top is coming down, the bottom is stable. On the VIX and the volatility of volatility, we've seen a massive jump upward overnight to 37 due to the Ukrainian-Russia conflict. Keep an eye on that. We'll talk a little bit about that. On the SPX, still very negative gamma regime. Remember, we have the JPM hedge out at 38.10. Those are 43,000 short puts on JPM side of the table. We're not going to talk about that today. We might do a separate video on that. Note, there's a huge amount of calls that are in the money at 4,000, and if they get monetized, that could drive us lower. Market status is really the same thing, just add another day, right? Failure at 1, should have entered shorts at 2, keep adding all the way on down to 3, and then here at 4, very clean bearish signal in the cumulative tick ribbon. There's nothing here that says go long, nothing. On the ES overnight, COI, which is a call open interest, actually has moved up a little bit. We don't read a lot into that, but I note it for everybody. That means that there are some new calls that have been opened up that were higher than the 4,600 level, something to be looking at. 2, positive GEX, positive gamma exposure, has dropped from 4,600 to 4,400. So it's come down from here down to here. This is fairly significant. Now it's below the zeros. This is going to have to be reconciled one way or the other. Both the zeros have dropped quite a bit, and we think that's because puts are being added to the overall structure. But as I noted, 4,200 and the 4,000 levels are still very much intact. They have not shifted, and we take that as the foundation being fairly solid right now. Note price is below 4,200. That means all of the puts that are at this level, and this is the dominant negative gamma for the structure, for the ES structure, very easily could see some monetization there. And as many of you know, if you monetize, we possibly could get a rally north at some time. Not saying it's going to happen, soon here. VIX is extremely elevated. Let's talk a little bit about the VIX. So vol is the VVIX, and VIX is down here. Key things that I wanted to show, the VIX is now up at 37, and we are outside the 1 standard deviations. Go do your own research here, but you can see it doesn't remain elevated too long when it's at these levels. We can have an opportunity there. Volatility has not painted yet. It will paint after the open. I am expecting some movement way up into here, but you also note this yellow line being the 2.0 standard deviation of vol. We don't stay above that too long. There is a play here. The setup would be to short UVXY calls. I don't know if this is the time or if tomorrow will be the time, but it's something I'm watching. As far as the SPX is concerned, note a huge support level down here at 4,000. I mentioned that in the opening there, with these calls possibly being monetized as we walk down, putting some weakness into the overall system. I do think this is a big deal. Here at number 2, we have basically a lot of gamma that is now, the futures were down in the 41.10 area. We have a lot of gamma down here that is potentially going to get monetized because it's in the money. Same thing over here at Circle 3 with these minus gamma exposure levels. Circle 4 here is the expected move. I actually think this is on the weaker side, but it also could be just the market has already priced it in. We've had 2 days of extremely high volatility in the SPX put side of the equation, and this is actually the lowest of 3 days. So that's very, very interesting. It actually suggests that the range is not going to be as wild today as, I mean, we'll have the opening gap, of course. So, but it suggests the range, intraday range, is not going to be as wild. Note, adjust whatever the opening numbers are to this 2.5 range. This was calculated at the close as of yesterday. On the expiration profile, note the growth of negative gamma below spot price. Again, this is showing that we've had a lot of puts being added to the overall complex. Look to see, since these are short-term dated, look for these to get monetized one way or the other. And we think that can, potentially, they'll either get moved lower or they could potentially move the markets higher. We're just gonna have to wait and see. From a 1 DTE perspective, still very net negative for tomorrow. Not very strong though. If you look back here at the expiration relative to where we are on Monday's expiration, you can see here this level is not overly significant for the expiration tomorrow. 4,200 is where the predominant level is coming off tomorrow, and obviously you can see a lot of other levels here that will grow as puts are added and betting on more of a downside movement. This actually is not a very strong 1 DTE picture. I don't anticipate anything that can be played out of this. As far as the overall SPX, again, hugely negative gamma condition, large number of negative gamma sitting here. This is larger than we've had in some time. Circle 3 shows us the primary level coming off that dominates the, not coming off, it dominates the complexes up here at 4,200. Note the delta level here. These are in billions of dollars. These are significant dollar amounts. Note the reversal here at Circle 5 on delta. It goes from all negative deltas to a positive delta. That actually coincides with what you see here at Circle 6, where we have call open interest and put open interest. Note that the put open interest, 405,000 contracts compared to 209,000 contracts. So completely dominant on the negative open interest here at Circle 5. A lot of gamma to play in here. One thing that I want to draw your eye to is over here at Circle 7. Just be aware, we've got a lot of expiry, a lot of gamma coming off here, over 40% between now and March. It'll be interesting to see where this all the money gets played to. So that's it for today. Extremely volatile, extremely uncertain. There are no long plays per se, no short plays per se. Watch vol. There might be something setting up there. Do your research. Again, this is not investment advice, and we're watching and learning just with you. You can reach us at GammaEdge.us. That'll take you to a sign-up page, 14-day free trial. Come in, kick tires, all the tools will be turned on. Got a great group there, very active. And of course, you can follow us on Twitter at GammaEdges. Thanks, everyone, and make it a great and safe Thursday.